Hello, it's Connie from Prosperity Finance. I hope you had a great long weekend. Now, over the last few days, you probably heard more banks has followed ANZ and reduced the LVR, which is loan-to-value ratio, from 70% to 60% if you are buying investment property. Well, I wasn't surprised because the property market is still really hot. I just want to take this opportunity to give you an update in terms of what is the latest LVR policy. And also, if you are still looking to buy rental properties, what are the ways to get around with the deposit requirements? Because I've been asked a lot recently, I lived it too late, I still want to buy, what should I do? And finally, I just want to use a case study, a real case study, to illustrate what you can do to improve your current structure so that you take the opportunity when you can. So, firstly, let's talk about the latest policy. So, at the moment, the banks who are lending 60% on investment properties, these banks include ANZ, Kiwibank, ASB, and BNZ. Now, the banks that still lending 70% LVR on investment property are Westpac, BNZ, and Chinese banks. You probably heard I said BNZ twice. Yes, they lend 60%, but they also lend 70%. Why is that? Now, what happened was BNZ introduced policy and said if your application was brought in by a financial advisor, mortgage broker, I can only lend you 60%. However, if you approach us directly, you can borrow 70%. I was so disappointed when I saw the news. Why is that? Well, this is the first time I heard that banks introduce policy that has a different treatments for different channels. In this case, whoever work with mortgage broker get disadvantaged, right? That's really wrong. And they encourage people to go to the bank directly. Now, I used to work for a bank for a number of years. And one of the reasons I resigned and start Prosperity Finance was because bank can't always in your best interest. They have to only sell their own products. They can only have their own policy. And they have targets. So even your bank manager doing absolutely everything they can to help you, they can't 100% in your best interest. It's just because the limitation by the bank offering. Hence why I want to be neutral. I want to help you. And that's why in our services, we always go beyond and above the servicing, the LVR. It's normally is a holistic approach. It's about your asset protection. It's about your tax efficient. That's about flexibility. Like now, if you borrow everything from BNZ, you're probably stuck with the equity, right? And you probably, if you sell anything, your existing portfolio, you can't keep anything in your hands. So that's about flexibility. And also save the interest. Bank never tell you that. So they encourage people to contact them directly, but clients do not get expert advice. So it's really gutted. However, if you have to only borrow from BNZ for buying investment property, and you definitely need to borrow 70%. By all means, you go BNZ directly, because otherwise you couldn't buy property. So yeah. Anyway, so I just want to just cover that part as well. Right, so next part, let's talk about if you are looking to buy rental property and you struggle getting, more deposit or more equity. What are the options? Okay, so number one, if you buy a new property, the way we define new property is the CCC was issued within 12 months. So it doesn't have to be off-plan property or it doesn't have to be a property under construction. You can buy existing property as long as the CCC was issued within 12 months. Because the new build is LVR exempt, so you can borrow up to 80% even. Now, second option is to go to a non-bank lender. When you purchase the property, you can go to the bank, and most people go to the bank. But some reason, bank may not give you the loan or enough loans. So sometimes you can use a non-bank option to widen your options. Sometimes it's about having that solution there, right? Now, with the non-bank lenders, yes, their interest rate will be a bit higher, so you probably expect from 3% to 7%. Depends on lender and depends on situation. Obviously, if we can help you save interest, we will. Just let you know, there will be a range. Yes, definitely high interest rate, but that could mean from no solution to solution. So you need to do the math and figure out if that's the option that you're going to use. Non-bank can do 80% because they are not governed by reserve banks, so they don't have to follow. They're not banks, right? So they set their own policy, right? So as long as they have enough appetite, they will do it, right? So that's the second option. Now, there's one more option, and it's actually bank option. Is a lot of people, they think they don't have enough equity, but they do if they get a valuation done. Normally, the bank do not require register valuation, which is the paid version. They use a system called Velocity or CoreLogic. In New Zealand, there are two systems they use for evaluate a property value. They get the value for your property. You don't have to pay for this. However, the value may not reflect the true value of your property. If you put your property for sale in today's market, you probably end up with much higher value than what the banks use from the EV, which is the estimate value. The reason being is both systems that use the same methodology, which is they compare your property with another property or other properties in your area, like 5K kind of a distance, for example, and then see how much they've been sold for over the last 6 months. Now, when we are in the rising market, the value was actually for a few months back. So, of course, if you're selling your property today, you're going to get more money than a few months back, right? But you just have to pay for valuation service, because that involves professional valuer to go to the site, go to your property, and then do a comparison manually. The cost is 0.1% of your value, just rule of thumb. For $1 million house, probably costs you $1,000 to do the valuation. And once we put your property into that valuation system, it will automatically show the cost, so you can get the cost upfront. We mentioned about the different methodology between a registered valuation done by a professional valuer versus you getting the value from the bank's EV. That's because the market kind of changing. But also, valuer can access to some of the latest data that the EV doesn't. Even the property is not settled. Now, if you know your neighbors sold the property like 200K above the EV, and your property is even superior than their property, then that's kind of a signal that probably do a valuation. It's probably kind of help you to boost the equity significantly. And also, when the valuer goes to inspect the property, it's probably best to let them know which property sold for how much, because they may not aware the sales records. As long as you give them an address and indicative kind of sale price, they can contact the agent and find out the evidence how much the property sold for. So then you can get the best possible value, right? So these are the three options. If you're still looking to buy a rental property and you struggle with enough deposit or equity. Right. Finally, I just want to quickly use a case study to illustrate how important it is to review your current portfolio, your loan structure. Because if all the banks change LVR to 60%, you probably lose this opportunity. Last year, about mid-November, we published articles on our website and YouTube channels and our WeChat accounts about what you need to do to grab the opportunity in case the LVR rule do go tighter. So these points are still relevant even though we are talking about from 70 to 60%. The principle are the same. So if you haven't done so, please do that, because if you missed out, I don't know when is next time you can buy a property again, or have those benefits that I mentioned in my blog. Now here I just use a quick case study. We have existing clients. They have ASB Bank for their home loans. So ASB use their family home and one rental property as securities for the loan they borrow from ASB. And they also have Westpac loans against one rental property. Now, over last 12 months, the Westpac rental property has gone up value significantly. Now, the client always have a concern about leaving ASB because with the ASB, because they bank with ASB early, they have really large revolving accounts. It's called Orbit. Now, they have 550K Orbit accounts, facility limits. Now, just so that you don't know, like bank now have restriction about what is the cap limits for revolving. So largely, up to 300K. Once over that, you can't have it, right? Because bank want to control that. But if you already have it, you have it. They won't remove it, just for the new ones. Now, they don't want to leave ASB even though they're not happy with the bank, because they just feel that it's so handy to have that 550K revolving, right? So they can't leave. And secondly, their family home they want to protect. They know it's the best practice to discharge their family home, but they just can't because they don't have the LVR rule kind of had limitation. So after they review our article, they approach us and ask to review for them. So what I noticed that one, Westpac property has gone up value significantly. They can top up to 500K, right? So with that 500K, we can use 300K to partially replace ASB Orbit accounts, so that their Orbit can reduce to 250K. So they still have the 550K revolving, but it's made up of ASB 250K and Westpac 300K. So that even they move banks later from ASB to another bank, they can still easily to have 250K. It's not 550 anymore. So they don't need to have that strain anymore, right? So that's number one. Now, I mentioned the top up was 500. Right, so that 300K goes to replace the Orbit accounts, and there's another 200K to repay ASB existing fixed loan. So by doing that, ASB total facility is reduced by 500K. As a result, now Westpac property top up to 70% of the maximum LVR. So we don't care if ASB Westpac introduced 60% LVR. And on the other hand, ASB rental property also gear up to 70%, and their home was mortgage free. So that's great. That's what they want, right? And also we remove Orbit constraint so that in case they do have to move away from ASB in the future, they can. They're free to go. Right. So we help them to achieve three things by just shuffle the loan structure and help them to restructure. So obviously they were really, really happy in the end. So if you haven't reviewed your structure since the LVR rule changed last year, it's probably the last chance you can review and make some changes. So do it as early as you can. Okay, thank you so much for watching today. I hope you get some value from this video. And please, if you can, help us spread the love and share with other people so that they can get benefit as well. Thank you so much. I will see you next time. Bye-bye.